Good morning, everyone. Darius Dale here to present our macro minute for Thursday, December 2nd, 2021. Starting with markets, we got stocks mixed this morning with the U.S. equities leading, commodities up, crypto down, dollar down, global bond yields down. Big movers this morning at DAX down 1%, Russell 2000 up a percent, MSCI Emerging Market Index up 1.5%. Yesterday, the high short interest style factor here in the U.S. equity market collapsed 5.5%. In our opinion, that's a good thing because shorts working and leading to the downside limits the need for indiscriminate selling of more higher quality longs. So that's a good thing for now. On the economic front, rounding out the balance of the November manufacturing PMI data, more of the same, mixed, sort of portending a November peak in the post-Delta bounce. So we got the U.S. ISM accelerating, Mexico on the decelerating side of the ledger. We got Brazil, Canada, and the U.S. market. So a little bit of divergence there with respect to the U.S. PMIs. Within the ISM release, our key metric to watch yesterday did exactly what we thought it would do, which is the percentage of respondents reporting slower supplier delivery times ticked down to 48.2. That's the lowest reading we've seen in a few months. The prices index, the ISM prices index, ticked down to 82.4. That's the lowest reading we've seen in a couple of months. Our medium-term outlook for inflation, taking it to the chart here, it remains dovish in rate of change terms. So as I've been saying, hey, I think we're kind of nearing the cycle peak of inflation. Might get one final poke higher in terms of the November data we're going to get next Friday. But the reality is, we're going to start the crest and we're going to lose sequential momentum into steepening base effects with the fiscal drag of epic proportions that'll catalyze a trending deceleration in inflation. So investors who are, as loud as inflation sounds today, you should expect to hear a very different a tone of narrative, a different sequence of narratives on FinTwit and elsewhere with respect to inflation 6 to 12 months from now. So this is how you invest. You position for things that are going to happen, not the current narrative, not the current storytelling. So taking it back to probable range setups, overbought signals, nothing in the global macro risk matrix, oversold signals in the DAX, the Nikkei 225, the Russell 2000, WTI, nat gas, and silver. With respect to the S&P 500's probable range, we got minus 0.1% downside versus 5.1% upside. WTI at the lower boundary of its probable range with 22% upside. Bloomberg Dollar Index minus 0.5% downside versus 1.4% upside. 10-year Treasury yield at 4 basis points of downside versus 35 basis points of upside. Bitcoin minus 4% of downside versus 17% of upside. Ethereum minus 11% of downside versus 14% of upside. And gold is probing the lower boundary of its probable range with 6% of upside. So with that, Darius Dale presenting our macro minute for Thursday, December 2nd, 2021. Everyone have a best of luck out there today. We're going to keep it working, keep it moving.